morning. My name is Kola, Aina, and I'm managing partner of Ventures Platform. We're a Pan-African early-stage fund, and I'm here with
Karthik, Reddy. I'm a co-founder and managing partner at Bloom Ventures. We operate out of India.
Together, we've been asked to share a few themes with you this morning about our respective markets, the Silicon Sahara and the Indus Valley. Karthik, over to you.
Thank you, Kola. So basically, we were given this task by BI to try and see if we can compare and contrast the two markets, what's working in a common fashion across the markets, what's the contrast between the two markets, some unique themes and some takeaways. So clearly, the big story out of India for the last 7-8 years has been just the digital infrastructure that we put in place. We have a lot of slides, so we're going to run really fast, but basically I'm going to leave the headline items and we'll share the deck with everyone. But fundamentally, a lot of what was presented as hope in the first presentation before Chirantan came and threw water and all of that was basically built on the idea that you can build phenomenally new, interesting infrastructure that builds ecosystems that allow for innovation much faster, and India has been a fantastic example of that. We would love to export it to the rest of the world. These are just some headline numbers that you're seeing on what the impact has been over the last 7-8 years. The biggest one we've seen is on financial services and how almost every growth of every startup has fundamentally been driven by just ability to give access to more and more people, hundreds of millions of people with the mobile phone, with almost like the efficiency through which a transaction can happen, a financial transaction can happen, how ID can be verified, is the power of the platform. And then even as payments change, we talked about consumption, how difficult is it for somebody who's loves their dialect and their local language and how they want to pay for it, but it's a pain to pay for it. And suddenly, where you couldn't have a credit card on file, now UPI you can have on file and have a recurring payment. And that suddenly allows for someone who's delivering content to the next 500 million people, not to the Netflix audience, to take off in terms of the number of subscribers who are using UPI autopay, which basically allows for their bank account to be debited by as little as 200 rupees, a little over $2 every quarter. Over to you, Kola.
In Africa as well, we are seeing the important role of DPI in helping companies particularly scale coverage and access to underserved communities. In Ghana, for instance, there's an open data initiative by the government of Ghana that's powering fintechs like Ozi. In Nigeria, the central bank has been very aggressive with building DPIs like the NIBS platform, that's the Nigeria Interbank Settlement System that allows for instant payments and is enabling startups like Lemfi and OPay and MoneyPoint. I believe there's someone from MoneyPoint here. But you also have the National Identity Management Commission that's rolled out digital identity to about 70% of the Nigerian population. This is really encouraging, but there's a lot more that needs to be done. Last year, I was on a private sector delegation that accompanied the Minister of Digital Economy to India, actually, where we were visiting to learn from what India has achieved in aggregating all of the disparate systems that exist in Nigeria so that you can power more services to the citizens of the country. Already, the Nigerian government has launched a program to scale connectivity to every one of the 774 local governments in the country, and this is already afoot in the country. But I think very exciting for me is an initiative called PAPS, the Pan-African Payment Settlement System, that's been developed by the Afrexim Bank that hopes to basically accelerate intra-Africa transfers, remittances, country to country, outside of the framework of the US dollar. I think when this comes on stream, coupled with the AFCTA, we should really see an acceleration in the facilitation of trade between African countries. Another exciting theme that I've been monitoring across the continent is really the maturity of the ecosystem. So when Ventures Platform started in 2016, we were very dogged in telling our portfolio companies, focus on being dominant in your local market. And then we got slightly more ambitious and really started to look at Pan-African expansion. But what we're seeing today is a new class of companies that are focusing on a strategy that I like to call E2E, or emerging market to emerging market. Already we have companies like Lemfi, one of our portfolio companies, started in Nigeria and today operational in India, in Pakistan, and even in China. You have Time Bank that recently got minted as a unicorn and is now operational in Philippines, starting from South Africa. You have an earlier stage company called ASAC that started in Tanzania and is now operational in Mexico. And you have from Egypt, M&T Halan, most of you will be familiar, that's now operational in the UAE. But I think a really interesting one is a company called Move, a mobility company that started in Nigeria. Today partners with Waymo in the US, but is also operational in the UAE and India. This is excellent because we now have these companies exporting African innovation to the rest of the world as a path to scale. So now would move further with contrasting both our markets.
So this has become a new sort of power tool for Indian entrepreneurs to be able to access public markets. Clearly, of course, there's been a little bit of a downturn over the last few months, but I think Indian public markets are more robust, more deep than most people thought. It's just that tech innovation and that exposure was never given into the public markets because a lot of them were loss-making companies. And the public markets have shown incredible risk-taking appetite to actually absorb loss-making companies. The fear was that the regulator would never pass them. But if you can see the trend line from the last few years, we've had a phenomenal public market sort of surge. In general, not just for tech, but even outside. Hyundai Motors had like the largest ever public issue last year for $3 billion. And so fundamentally, what's interesting is we have now becoming, if you look at the numbers versus 2018, you can have lower revenue, lower market cap, and still list. So this is a myth that you have to become a unicorn, you have to become profitable, and then only list. That's the American market, if you ask me, where you have to be 3 billion or 5 billion before somebody even chooses not to ignore you as a small cap. In India, with 300 million, 400, 500 million, you're a very respectable analyst-covered stock. So I think this is opening up phenomenally the opportunity for more and more. And it's not like we didn't have it. It was just that there were so far and few between that people disregarded this as an exit option. We think, at least at Bloom, we think between now and 2030, for the next 6 years, we should have 125 to 150 IPOs in tech alone, venture-backed. And a lot of them can be as little as 250 to 500 million. There'll be another batch, which is 750 to 1.5 billion. And then there'll be a few big ones. But you shouldn't discount the fact that all of these are going to be material exit options in India.
The last few slides have just made me really jealous because the story in Africa is slightly different. IPOs haven't been as easy for startups, and that's really because the markets have limited liquidity. There's lots of work going on across different ecosystems. The Nigerian Stock Exchange, for instance, has recently launched a tech board to really encourage smaller cap IPOs, and there's a couple of IPOs in the offing in Nigeria and in other markets. But a lot of the liquidity that African fund managers and startups have delivered have really been on the back of secondary exits and strategics. Recently, TechCrunch reported a fund called We Capital returning its Fund 1 on the back of secondary exits from, I believe, the MoneyPoint transaction. At Ventures Platform, we've been quite fortunate to also return 4 out of our 6 vintages, mostly on the back of secondary exits. And so the IPOs are not quite yet mainstream on the continent, but there is, in fact, fund managers are being creative with liquidity options.
So I think there's one more common area where we both agree that basically this has become the fastest sort of growing phenomena. I'm not getting into the data as much as why has this happened. It's very clearly the fact that the density of the populations in the top 10 cities in India and where the consumption is the highest in the country clubbed with the fact that you have incredibly low labor cost, which does not inflate because there's such few jobs at an aggregate in India, that if you are churning out 50 to 100% of your rider workforce every year, there's a lot more coming from the nearby villages or from a distant village for that matter to come and actually ride a bike and make 18 to 20 to 25,000 rupees, which is somewhere between $250, $300 a month. And that, it goes back to the first presentation. You have to create more opportunities for these folks to get employed. You combine these two and you have a powerhouse of like an industry, which is essentially you outsourcing your labor capacity and getting convenience at an incredibly low cost that no other country has seen in the world. And so basically, the behemoths in the commerce scene are becoming very large capex providers, building commercial, you're taking real estate, commercial real estate for dark warehouses, putting all of this infrastructure in place. We talked about how somebody starts by doing one task and builds an entire ecosystem in that the Christensen Institute presentation. This is exactly what you're seeing in quick commerce.
Across the continent, the quick commerce segment is an exciting segment, but one that definitely has a lot more potential that needs to be unlocked. There are a few critical challenges that companies in the segment face. I guess the most important is the dearth of infrastructure and poor logistics across some of the markets, as well as challenges with warehousing and inventory constraints. But there's a lot of innovation happening across the segments. As a case study, I want to highlight omni-retail. Omni-retail is innovating across this segment by creating an integrated business model that cuts across the primary, secondary, and tertiary segments of the entire value chain. It's this idea of market creating and backward integration that really helps to drive the quick commerce segment forward on the continent. Across our portfolio, we're investing across companies at the layer one of the trade value chain to build a more vibrant quick commerce ecosystem. Now, I want to spend a few minutes to talk about some uniqueness, particularly as it has to do with the African startup ecosystem. Now, I often have to remind folks that Africa is not a country. And so when I was invited to do an Indus Valley and Silicon Sahara benchmark, I said, well, it's a continent and a country. And the reason this is important is, I think in the early days, people assumed that an African startup can simply scale across the continent. Now, the charts you have on your screen is a really interesting look into sort of what expansion across Africa looks like in 2024. You would notice that the number of companies from Nigeria that expanded was probably the most aggressive at 14. But the number of companies that expanded into Nigeria was rather low. Some would say that if you make it in Nigeria, you can make it anywhere, but it's really tough to come into the Nigerian market because of several constraints. Now, on the flip side, in East Africa, we saw a large number of expansions into East Africa and a more modest rate of expansion from East Africa. Now, you can take what you want from this, but I think the point I wanted to send across is you can't quite just wake up and expand across the continent as easily as you might do in other parts of the world. And so at Ventures Platform, in thinking about how you think about regional scale outside of the E2E expansion that we talked about earlier, we've come up with a framework that we call the lake and ocean market strategy. And there's this idea that on the continent, you have two types of markets. You have large ocean markets with populations in excess of 40 million, where you can, as a fund manager, you can back a number one or number two, or even a number three, and still deliver venture scale returns. But you've got smaller lake markets with populations sub 30 million, where you absolutely have to back the number one. But some of the lake markets also have the additional benefits of having very high fidelity for multi-country expansion. So for instance, the Francophone region. And very recently, well, because of the commonality of language, the common regulator from a financial services standpoint. And very recently, we've seen an acceleration of focus on the Francophone region, particularly as a consequence of this rather unique advantage. this is how we think about Pan-African expansion, and I just thought to share this with the room. So in closing, I'd like to share some takeaways with you. The Africa-India comparison is a fair one, but it has its limitations, and chiefly because the African nations tend to be very different in terms of regulation, in terms of culture, but there's quite a lot that the continent and startups and fund managers on the continent can learn from India's digital success. If we focus on funding and building market-creating innovations like Ifosa spoke about earlier, we truly can lift millions out of poverty. I think the advantage we have, and one of the reasons I get really excited about coming here every year, is as a continent, we can learn a lot from India's mistakes and missteps and build a truly vibrant ecosystem. Thank you very much.
Thanks, Kola. So I think, so clearly, the commonalities for us with what the opportunity set in Africa might be is, and what they can, and we can learn from each other, is fundamentally we're seeing how India too, with digitization, as we classify them as, India 1 is like Mexico, India 3 is like Sub-Saharan Africa, India 2 is somewhere in between. But the buying power, as imagined, is not as high. So you have to actually rethink how a business looks like when the sort of infrastructure and 500, 600 million people are brought into the digital economy. So we think there's a lot of commonality with what an African market looks like as well. I don't know if there's too much cross-pollination, but we do think that innovation that's built out of India in deep tech areas like healthcare or energy can easily be knowledge transferred or shared and partnered with a lot of African companies. On the consumer side, we are showing you how it looked like, how things looked like for India 1, which was the sort of premium 100 million audience, which has a much higher per capita GDP. And as the market started aggressively adopting payments and access post-COVID around that time, you can see that the new folks are building very, very differently in India for a different audience. The other thing that's happening in India is, unlike Africa, I think the uniformity of regulation across the country allows for a lot more spread of the business more rapidly in the country. And so we are seeing manufacturing and areas of that nature move to entirely like cloud manufacturing. The entire businesses rebuilding anything that was entirely SMB dependent in a regional market and taking it national and taking it to massive scale. And so, yeah, I think we have a consumer model that's evolving, which is very, very attuned to the new digital, sort of adopted Indus Valley. So my last 2 points to just summarize is on DPI. So far, I think we've seen the power of that on financial services. I think what we will see for the next decade is commerce, mobility, energy, and even AI, where the government is getting its act together to sort of consolidate all the data lakes in India and make it sort of a walled garden, little like a China. And the second is our ability to, I think the point I made, it slipped my mind, but again, thanks for the time and thanks for giving us this opportunity to present Africa and India, a tango that's waiting to happen. Thank you.
Thank you.